What's up, traders? Norog back for another weekly strategy session. In these videos, I look at the support and resistance level of major markets to see where I want to trade them in the week ahead. We're going to look at stocks. We're going to look at crypto. We're going to look at the stuff that you and I might be interested in. Now, this is coming off of a very interesting week. There was the invasion of Ukraine by Russia. And a lot of people thought that was bearish for the markets. After all, Wednesday night when it was happening, the market was down almost 3%, the Nasdaq at least. Crypto was down, everything was down. And then Thursday, there was just a hard reverse. And everyone's asking, how do we trade this? I thought that war was bearish. I thought war meant that we were going to crash the market, blah, 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 blah. This is why I don't trade news. I think it's absolutely worthless to pay attention to what's going on in the world. Yes, I said that because the market can do things that no one expects. That's where the real money is. And we can see that in price action because if we're trying to trade the news, it's already happened. It's already priced in. And so people spend a waste of time trying to figure out by reading the news and watching the news how to trade. I think it's worthless. I think you have to look for support and resistance levels and look for opportunity setups for you to trade and be mindful of them before it even happens. So that's my spiel about the markets. And if you're wondering, that's the dog in the background with a squeaky toy. So we're just going to go on past that because I like that intro. All right, we're looking at Bitcoin. So yesterday, the weekend price went down from the rally it had. In fact, we can see that across the board with the S&P and everything. On Friday, the market rose off of this rally. We're going to come back to this. This is a very good setup right here. And I'm going to tell you why. But let's talk about Bitcoin first, get that out of the way. So for the longest time, for all these weekly videos that I've been doing, I have been looking at the support level that Bitcoin is at. Is going to be defined by the all-time high down to the COVID low. And 36,000 is where price got down to on the January 24th liquidation, held, and we are right back at that support again. We got caught to the upside at about the 42,000, 43,000 level, and now we're being held on the downside. We found ourselves in this range right here. Now, when is Bitcoin going to go up? When do I get bullish? My strategy has always been based on the Ichimoku cloud. I am looking for price and momentum, the Chikou or lagging span, to get above the cloud at the same time. That would be a bullish setup for me. And that's going to happen possibly in the 46, 48 ranges if we can get back up there. However, if we break the supports that we've established here around 36,000, watch out. That's going to be bearish. And that's going to actually begin to set up a bearish trend on the weekly. That's going to be very bad for the bulls. For right now, we're holding that support, but be mindful of it. Ethereum is doing basically the same thing. It also came to its 50% retracement level around 2,500, and it's also holding the bottom of that weekly Ichimoku cloud. Price getting on the other side, bearish, but we're not there yet. Could very well hold to go up on both of them. We need to wait and see. If you're wondering what the daily trend looks like on Ethereum, you have it up here. All right. So if we got into the 34, 3,500 range, that would get us bullish. But for right now, we're just kind of caught in a nice little boring range. The other thing I like to look at when I look at crypto is the Bitcoin dominance, the Bitcoin market cap dominance. It is still elevated and technically trending up. What I would look to see is if the Bitcoin dominance begins to fall, that's a signal for alt season. But right now, with the market being a little fearful, people are going into Bitcoin, the safe haven asset of the cryptocurrency space. And that's reflected in the market cap of Bitcoin. So for right now, no alt season. We're not bearish. We're not bullish. We're caught. So keep that in mind. Let's look at the stock indices because this is where I find a lot of interesting things going on. Now, This bar on the 24th of February, which, if I recall correctly, was, yes, Thursday, that was when we had this war invasion news. It's very interesting to look at the overnight session here, where we had that Wednesday night down, 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 all through the Euro session. And then right at the Thursday open, boom, just perplexing everyone. Why is the market so crazy? I don't like to ask those questions because that would, that makes you think too hard. You don't need to. The market has revealed itself. The market has revealed itself now. And I'll show you what I mean. So before Thursday, before this last week, and by the way, remember, if you'll go back to my last video, you'll notice how on the daily, we saw where price had held this resistance right here, which again was the 50% of this down move. That was the week prior, the 16th of February. We knew going into last week that it was going to be bearish, at least down to the 24th low. That spike down that we had, that little wick on the 24th. Well, up until Tuesday, we were at that support level, that low. And then this bar that broke it, but then look at this candle. This is where the magic happens. We broke below it, got everyone thinking that we were going south. This was going to be the crash, only to snap back up and close back inside this range. One of my fundamental principles of trading is looking for false breakouts. This is a false breakout. Now, I don't know the future. It could go down and you could get the crash everyone talks about every day. But I'm going to have to assume, based on this false breakout, this psychological inversion, if you will, where everyone thought one way only to have price snap back the other, that the most probable thing that's going to happen is we go from here back up to retest the high. I can say that not worrying about being wrong because I know where I'll be wrong. Where I'll be wrong now is if we break that Thursday low. And what that lets me do is it lets me set up a position, a trade where I know my risk needs to be below that low. If for some reason we break that low, then yes, you'll have me on this weekly discussion coming in and saying, okay, we broke the low, we stopped out the long trade. Now we're going down to that crash or whatever people are talking about. But the market has just revealed itself. It got rid of all the sellers, it got rid of all the bears, it slaughtered them down here at the break of the low. And now you're in a long trade back up to the high. And the way you're able to do that is you're able to say, that's my risk because I know when I'm wrong. I know when this long trade is over and we are going through more of a bearish cycle. When we break this low, the market has revealed itself to us. The same thing happened on the Nasdaq with a spike down. In fact, I really like it because when we come in here on Friday, I didn't really see a trade. I was a little busy on Friday, but now what we did is we pulled back right here to this level. I really like this here in the evening. And when I get off this call, I'm just going to put something on a small position, at least just to express this, because this is the setup that I train myself to look for day in, day out. Oh, by the way, hashtag not financial advice, but come back in a few weeks and we'll see what turns out. So that is the price action at the moment. And I'm very animated about it because this is the setup that I trust the most when you have everyone thinking one way only for it to go the other. I don't need to know what Vladimir Putin is going to do. I don't need to know what Biden is going to do. I don't care. You know why? Because they're not going to send me a text message or give me a call, nor can I speak Russian anyway, and tell me ahead of time what their actions are going to be. There's nothing I can gain from knowing that, but I can look at price action and I can know where my stop needs to be, where my risk needs to be, and then define a trade based on that. That's all I need. The VIX. The VIX, very interesting thing happened this last week in the VIX. Now, I am not an expert on telling you the future on the VIX, but it can reveal some of the price action of the S&P 500 if you pay attention. Looking at it from a divergent standpoint, On the 24th, where we had the low in the stock market, VIX made a high of 38.94. On this low that we made last Thursday, the February 24th, the high was 37.79, and of course, it came right back down. So you can see very clearly that even though the market made a lower low, it was not reflected in the VIX. Options pricing, fear index did not follow through with a higher high on the VIX. So even though you had a lower low on the stock market, which would imply a higher high on the VIX, it did not happen. And then the VIX, of course, came back down. Now, of course, if this action that we're seeing today carries on overnight, then I bet the VIX might open somewhere up in this range right here. We'll have to find out. But the key level I've been watching is VIX of 26, about 26. And if we can get back below this level, I think finally we'll start to see that market begin to rise and VIX go back down into the 20 range over the weeks to come. So this key action right here on the VIX, I think is very, very important, that it did not actually make a higher high. And so that's what I'm going to be watching. So I think we had to look at some tech stocks from last week because that has been where a lot of people have been suffering a lot of pain, and they did some very interesting stuff. So, yeah, we'll look at the tech stocks and then we're going to look at the commodities. So Apple. Now, Apple, I'm going to admit, I made an error. There are two ways that I like to draw my 50% retracement levels. One way is to try to assess the entirety of the trend. And that's going to be from like an all-time high down to the COVID low. So that is what it would look like on Apple if we took the whole meat of that trend all the way from 2020 up to the beginning of this year, 2022. And that would have put the 50% retracement level around 118. Well, my indicator, which tells me where certain 50% retracements are based on 200 days, tells me that we came down to one at 152.50. And this is a different one, which I still consider valid. It is what I call a launch point retracement. See, that's why indicators don't always match up and you have to do things manually. If you look at it from the starting point in June of 2021, where this trend, basically Apple was more or less consolidated, and at that point it began to trend. That then defines another trend that you can draw the 50%. And that is what it actually came down, pinged, and held right here at the 152 level. Not saying I caught it because I was looking for something a little bit cheaper, but man, I love to see it when something comes to a support of 50% and holds it. It's beautiful. Nvidia came down to hold its 24th low, and that is where it bounced off of. The same thing happened in Google. Google did the exact same thing, came down to the 24th low, pinged it. I picked some more up there. Google is actually my highest conviction trade of 2022, as a matter of fact. It may not give me YOLO gains, but I am very confident in having Google stock going into the split in the summertime. This price action coming down, I think, is part of that market irrationality. Putin invading wherever he wants to has nothing to do with the fact that Google is a company that's going to be around for years and years to come. And typically, when you have a split, there is a FOMO hype that runs up to it. So I was really happy to pick some more up here at the bottom there. Tesla. Well, Tesla is something that I got out of. The reason I got out of Tesla is because even though I want to own the company, it is just too much of a meme. And I will wait until some of the people that are a little too fanboyish to get out. I didn't like it how Tesla came down, breached the 900 level, which again is the 50% retracement of the, like I said, launch point of this trend up to the high. So we had a really good trade up to here, but it failed to make a new high. So I'm not quite so bullish on Tesla. And then what happened was now you actually had the 24th low get broken. And yes, now it has recovered, But look at these two charts: Tesla, Nvidia, Apple, Google. Which tech stock is the better one to own? There was a quote that I heard a couple weeks ago. I need to go back and find it, but it was from a old investment trader, whatever. He said he likes stocks that bounce like tennis balls. I need to go back and look up the quote. That's the gist of it. I want stocks that bounce, and these bounced. And Tesla did bounce, but it hasn't really recaptured the support of 900 that I wanted to see it. So, oil for weeks and weeks and weeks and weeks and weeks. Every time I've done this weekly session, what is the number I have put on oil? 100. Ping, it goes right off that 100 level. I think it could probably overshoot it, but man, that was an excellent, excellent target for the long that myself and some of the Discord people were in. We didn't really catch it off this level because we were so busy, but we caught it on the downswing. And now it has actually done its own sort of false breakout, where if it breaks the high of 100, then it could trend further. But for right now, I believe it's probably going to see a little bit of a pullback. Same thing happened in gold. I think a lot of people, especially on this war news, were thinking that gold was going to go up. And that trade sort of worked. In fact, if we look at it today, the S&P 500, the Nasdaq, it was crypto a minute ago, and then those are down. But gold and oil are back up again. It was the opposite on Friday. All of the stock market indexes and all of the risk assets like cryptocurrency were up, but the gold and oil, the war trades, had completely flipped. I know it must have messed a lot of people up, but a lot of people were trying to get in gold as a breakout. That's what everyone was asking me. It's like, is gold breaking out? Gold's breaking out. Well, to me, gold doesn't really break out until we break about 2100. You got this nasty consolidation here with lots of highs that it needs to conquer. And gold, back in history, if you look, this is a weekly chart, it has done this sort of pattern before, where it comes off of a trend and then it begins to consolidate in a wedge, if that's what you like to call it. Let's actually do it monthly. See if we can see. Yeah, there we go. And so the danger here is that, yeah, you could get a move to the upside, but you could also get a move to the downside out of this consolidation range. And then gold likes to do a whole lot of nothing for almost a half decade at a time. I'm not that interested in gold right now. I'm really not. But if you're in this trying to play the breakout, be mindful of this price action. Don't take it all the way back down. And if it breaks the high here, then you're probably good to go. So that is going to be the oil and gold trades. Those are going to be the major things that I'm looking at this week. I want to be long the stock market. I do. I want to be long unless we break that low. I'm going to be looking for pullbacks on some things that I like. One thing that I did pick up this week, I did pick up some waste management. Again, this is coming off of a major 50% level. Waste management, indeed, 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 indeed. There's also, the launch point here. Pinged it at 138.57. That was the stock, and that actually has reflected the bias of consumer staples. Waste Management is a trash company. In a recession, if that's what we get, which I don't think we will, people still need their garbage picked up. So that's the fundamental reason. But it also set up a very nice technical setup with a spike there on the 24th. So on that spike down, I would have loved to have bought more things, but the two things I picked up more of last Thursday were Google and Waste Management. And those are going to be the ones I'm going, and I'm getting the timer. So have a great week. Trade wisely. We'll see you in the next video.